trading at its best.
So those of you, if this is your first time watching these webinars or coming to these trainings, I'm Mike Swanson. I've been trading the markets for 10 years now and teaching traders for about half that time. And we've been teaching a lot of different things through our blog at TradeWestForex.com/blog. And it's been a huge success. We've had a lot of positive comments. Tons of emails have come in from people that have attended the webinars with lots of good things to say. So we'll just keep these things going as long as you guys are enjoying them. So today's topic will be how to calculate lots based on risk percent. I figured a lot of people don't have a clue what they're doing when it comes to calculating lot size. They end up just saying, okay, well, I got $1,000. I'm going to trade a mini lot for every $1,000 I have, which, there's strategies that will work fine with that. But sometimes it's nice to have a risk-to-reward ratio planned where you say I want to risk 2% and I'm going to make 4% if I hit my target. So to do that, you have to know how to calculate your lot size based on that risk percent. So I'm going to show you contract sizes, calculating lot size, and currency pair pip values. Those are the things we'll need to know in order to do this calculation. But don't worry if you get lost in any of this this formula. I do have a tool that you guys can download for free, the Informer tool if you don't have it already. We just got an update done where it calculates this stuff automatically. But let's take a look at so you guys can understand how this all works. So you've got contract sizes, standard lot, mini lot, and micro lot. Okay, so when you trade a standard lot, that's 100,000 in base currency. Okay, so it's 100,000 units. When you trade a mini lot, it's 10,000. Micro lot, it's 1,000. Okay, now when you have an account like IBFX, where they offer they call it a mini account, and what that means is everything is brought down on your account by 10. So if you trade 1.0 lots on a IBFX mini account, that's actually only 10,000 instead of 100,000. Okay, but for what we're doing today, we're going to look at it as one lot, 1.0 lots. A standard lot is 100,000 contract size. Okay, so now let's see if we can show you here how to determine your pip value. Okay, oops, get that back up here. So this is where the formula comes in and some math comes into play. But I'm going to try to explain it as best as I can. And just keep in mind I've got a way for this to be done automatically. But I think it'll be good for you guys to see how the math works. Okay. So you have 3 different kinds of currencies. And each one has a different pip value. So first we have to determine the pip value based on the currency pair we're trading and based on the currency of our account. So you have direct rates, indirect rates, and cross rates. So direct rates, these are going to be for currency pairs that are in the base currency of the account. So most of us have got our accounts in dollar, but if you have an account in pounds or Australia dollars, then you need to, everything's going to just be flipped for you. So if I'm saying euro dollar, Australia dollar, that second currency in the pair is the base currency. So yours would be Australia or pound here, and so everything kind of just translates over. But for this example today, we're going to keep it in dollar. Okay, so an example here would be for any of those pairs, euro dollar, Australia dollar, anything that has that dollar as the base, a pip value is 100,000, the lot size. We're going to say we're trading one lot, times that by the tick size, which these currencies have a tick size of 0.0001. We're not going to go to the 5th digit because we're looking at 1 pip is that 4th decimal place on these currencies. And that will be equal to $10 per pip. So dollar-based currencies, or pairs in the base currency, are really easy to calculate. They're always basically going to be $10 per pip per 100,000 contract size that you trade. Okay, so that's easy. Now next one gets a little more complicated. You've got to take, for indirect rates, but these are going to be pairs that have the account currency in at the beginning. Okay, so like the U.S. dollar yen, the U.S. dollar franc. Okay, those types of pairs those are called indirect rates. And here's an example how you would calculate this on dollar yen. Okay, 1 pip is 100,000 for the lot size. We're going to do one lot again times 0.01 tick size. Okay, so this is different up here or down here. This 0.01, if you look at any yen currency like this, Euro yen, US yen, they're going to have a tick size of 0.01. And that's 2 digits. And so some brokers have 3 digits on their account. We're not counting that as a pip. That's 1/10 of a pip. But anyways, take that, multiply it, then you divide it by the current price of that currency. So if the US yen was currently trading the bid at 120.50, then you're going to divide it by that. And that gives you your pip value for a US yen pair, for that pair, for anything that has a dollar at the beginning of the quote. Okay? Now the last one, to take it even one more step further, this is for pairs that do not have the account currency in them at all. These are called cross rates. Pound yen, euro pound fall into this category. Now, example of this on the euro pound is going to be take your 100,000 lot size, times it by 0.0001. Again, this currency is quoted with 4 digits or 5 digits, so we're going to take the 0.0001, and then we're going to multiply that by the current euro dollar rate. So don't get that confused here. You have to get the base rate for your currency. For the euro pound, that means it's the euro dollar. So we get the quote, the bid on that, and then so we multiply that, and then we're going to divide it by the current rate of the euro pound. So this example, that's 0.6750. So after you do that math, now you learn that 1 pip for a standard lot on the euro pound is $17.54. And this can change quite a bit depending on where these different rates are at. A lot of times it's right around 1.5 times what the euro dollars or the dollar-based currencies are. Okay, so that's a quick run through. Hopefully I didn't lose too many of you, but that's a quick run through of how you calculate pip values for a standard lot on the different currencies. Now, let's look at how you calculate lot size based on a risk percent and knowing those pip values for the currency pair you're trading. So all you got to do here, once you get that figured out, is take your account balance times risk percent divided by stop loss times the pip value of the currency you're trading. So here's an example. If you wanted to risk 2% on the euro dollar, we take your, say you have a $10,000 account. So take $10,000 that you have in your trading account, times that by 2 divided by 100. That gets it into a decimal for the percentage you're risking. 2% divided by 100, and then divide that by, let's say you used a 30 pip stop. So I put 30 here. You're going to take that 30 pips and you need to multiply it by the pip value. So euro dollar, we know that pip value is 10. If that was the euro pound, based on that previous calculation, it was around $17. So that part's very critical here. If you do that, if you don't multiply by the actual pair pip value, you can get yourself into a position where you're risking almost twice as much as you wanted. So there you go. I told you it was going to be technical, but I wanted you guys to kind of understand how this stuff works. So that would be a good lesson. And now I want to show you the little tool I've built, or something I just recently built into Informer that makes it do this all automatically and instantly as you're trading. I mean, because could you imagine trying to do all that math if you're trying to day trade or any kind of trading? That can be a real big pain. Okay, so here is our little trading tool, Informer. We've got all kinds of things on here. You guys can go look at the different posts on the blog about this. But what I'm going to show you here today is the automatic lot size calculation based on a risk percent. We've got it automatically doing this for you. So what you do is you'll set up your account in Informer. You'll just go into Add an Account, and then when you go to place a new trade, say we're in here on the quote board and I want to trade, say, the euro pound. Okay. What I can do is select my money management option, which we have more we're going to add, but right now you've got risk percent in there that we just talked about. There, I can say 2% or whatever percent I want to risk, and what's going to happen is it's going to instantly calculate my lot size based off of my stop loss that I enter. Okay, so if let's say I do a 50 pip stop. Looks like on this account I won't be able to let's do this. Let me switch it to the other demo account. There we go. So if I have, if I look at my account here, this one's $37,000, and I want to risk 2% with a 50 pip stop on the euro pound. It instantly did all the math and said that's 0.92 lots. And the cool thing is here now, as the price moves and everything adjusts, this lot size is instantly adjusting. If I bump my stop up a little bit, you'll see my lot size is changing. The bigger my stop has to be, the lower my lot size goes. Pretty slick, right? So it took some time to get that formula all tied into our tool here, but it's working now. And you guys, if you have the tool now, make sure you've got the latest version. You can just click on About, check for updates. It did an automatic update yesterday, but if you want to be sure, just go in here and click Check for Updates. It will say, yeah, the latest version if everything's good. Otherwise, it'll tell you to go ahead and it'll let you run the update. But that makes it a lot easier for when you're trading cross rates, indirect rates, and all those things. Watch what happens here if I switch to euro dollar. My lot size right now is 0.77 for a euro pound trade, but if I go to euro dollar, it goes up 1.26, even though my stop's the same. Okay, and then let's say I switch to a yen currency, euro yen. It went up even a little bit more because of the current euro dollar rate. So now you don't have to worry about doing all those calculations and being off, and then you wonder why, how come I tried to risk 2% and it didn't do it right? Well, it's because it's easy to make a mistake in manually calculating that. So doing it automatically is the way to go. And yes, you can trade directly from this tool now. We have built in where you can trade right on this little window. You can put a couple of these up. You know, you can go over here to your quote board, just double click on a pair, and you can have your order windows up with different risk settings ready to go, and makes a really slick interface for trading. Our thing that we're looking to do next, the big project next, will be charting. So then we'll have everything we need to be able to, you know, take yourself off of MetaTrader or whatever platform you use and use our platform. Okay, so let's see here. I want to get you the link here to where you can download this tool if you don't have it already, and then I'll take some Q&A and we'll break that out for the recording. So you can download it at TradeWestForex.com/informer. So I'll post that here in the chat. And the installer is really easy. I mean, we put a lot of work. It's probably put a couple months of work in the last couple of years as we built this, our different tools and things. We built an installer that's, I mean, anybody can do it. You just click a few buttons, it installs, it runs. Only thing is, if you don't have a password, when you first download it, it's going to ask you to sign in. Just click on Forgot Password, or there's a button there to click, or a link to click right on the tool, and it'll send you a password. The tool is free to use. Okay, we've got some different features that are premium services for members that are paying, and even this money management feature is on a trial basis because we do offer it in one of our tools that costs money. So we had to be fair to those that are paying for that service. But you'll see that there's a lot of free stuff in this thing. That's our goal with it, is to be able to give you guys something that's just really cool and doesn't cost anything. And then if you like what you see, we've got some premium services you can activate on it. And there's a lot more to come. So let me drop this link in here in the chat for you guys, and we'll get into the Q&A. Okay, I think we got it right there. I could probably click there and make sure. Yeah, it looks like it's working. So there's your link. That'll take you over here to the download page, and it's really straightforward. You just As you can see here, it'll just pop up depending on your browser. We've got a little window that'll tell you what to do. Firefox here is just telling me to click Save. If for any reason it's not working, you can't get it to install, which is going to be pretty rare, but if there's any reason it doesn't install, there's a button down here to click where you can use the zip and just run the file from the zip. So I hope you guys enjoy this. You enjoyed this training. I hope you guys will download the tool, and I hope this makes it easier for you when you're trying to day trade or quickly place trades without a mistake on your lot sizing.